This is your market update for the greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. Days on market went up again to 18 days on market. The list to sale ratio still at 100%, and your median closed price went up a little bit to $538,000. The average 30-year fixed interest rate came down again to 6.13%. And of course, your US inflation at 3%. Today, I want to talk about three things. First, the Fed delivered on their rate cut predictions and promises. The second thing is that the shutdown has gone past the 1 month mark. And then the last thing is a lot of layoffs continue in the US economy. So first, the Fed and the rate cut. We now have had two rate cuts in a row that were 25 basis points. We were expecting a third probably in December. The odds of that have now gone down. Mortgage rates followed by going down a little bit, but mostly that rate cut had already been baked into the mortgage rates. Reasons for the December rate cut being less likely now. You still have concerns about inflation. You have concerns about the shutdown. You have political unrest. All of these things are sort of putting the Fed in this position of having a really tough decision to make. Let's talk about that shutdown. So we're now past 30 days into this. And unfortunately, for millions of Americans, the reality is already hit home. You've got benefits being cut from programs such as SNAP because they're just not funded. And that's pulling money out of the US economy. That's drastically affecting the lives of individuals. And there is a tremendous amount of pressure, obviously, on both sides of the aisle in Congress now to get this thing to an end. But I really am not seeing what they think is going to be the solution yet. So the last thing that I want to talk about is the layoffs. CEOs from big companies such as Amazon, Google, Yahoo have all said we can do more with less people now because of AI. Just this past week, Amazon cut 14,000 jobs in the United States this past year alone. We've seen almost a million layoffs. And the Fed chair, Jerome Powell, said basically we're at zero job creation, maybe even a little bit of job loss on the year. So their job continues. The Fed's job continues to get harder because you have inflation still eking up. You have all of this economic unrest. And over here, you've got a big job problem that's probably only going to get bigger. And they're supposed to balance these two things that are asking for a different result. So we'll see what happens with rate cuts in December. So what does this mean for you specifically in real estate as a buyer or a seller? As a buyer, I'm already seeing that all of these things and much more in the US economy are putting fear in buyers, and you have a lot less acting, right? People are pulling back. So again, if you're a buyer and you can act right now, use the opportunity. There's going to be less competition and better negotiating for you. If you're a seller, the reality is right now you need to have your home ready for market. You cannot just make a decision and throw it on. You need to prep for market, and you need to price to sell. You need to outweigh all of the fear that buyers have by giving them the motivation of a great deal in a beautiful house. This is not 2019. We're in a different environment with different feelings the buyers have coming into your home. If you want that thing to go under contract and get to closing, you need to prepare and price appropriately. I hope this was helpful. Have a great week.